Edward Brown, host of the Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Dickie Baldwin. You're not going to want to miss this show. That's the Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. And with the weather the way it's been, you definitely got to get your tan on. So check them out, Tan Bella Tanning Salon. Today's trivia theme is miscellaneous trivia. Now, today, of course, this starting tax, actually, we're almost in the middle of tax season. We have Byron McBroom and Melanie Sikma, a father-daughter tag team of one-stop tax strategies. Byron and Melanie, welcome to the Best of Investing.
Thank you. Thank you.
Thanks for having us.
Well, we definitely could talk shop. My background, I don't know if you know, I've got a bachelor's in accounting and a master's in tax. So for many years, I had my own tax practice, and I used to. There was at one point I did over 200 tax returns by myself. I said, wow, that's too much. So I sold half the tax practice, built it up again, sold half of it, built it up. So I did that like 4 times. Then finally, now I'm down to about 10 clients who I just want to stay with those clients.
There you go.
Now, the name of your company is One Stop Tax Strategies. I guess this time of year is very, very busy for you.
Yeah, it is. It's very busy. It's funny. Our busiest time is the end of the year when we're meeting with everybody in tax planning, but this is another busy season.
Yeah. And then do you put a lot of people on extensions?
It's up to them, really. It's kind of depends on their needs. Right now, it kind of depends on if they're a real estate professional and if they, they're waiting on that bill that's being voted in to see if they can get 100% voted or bonus depreciation. It all depends.
Gotcha. It should be based on your time frame, not theirs. It's kind of even it out during the year there.
Have you ever been told you look like Robin Williams?
Yes, before he died, not after.
Yeah.
Of course, if I had his money, I'd throw mine away. So let's see here. Let me give you the background here. So Byron McBroom and Melanie Sikma are a father-daughter combo. Melanie grew up listening to Byron, a CPA for 40 plus years, talk tax and financial strategies with his entrepreneur friends and camping trips on camping trips. Interesting. Okay. Mm-hmm. His excitement for helping entrepreneurs make their dreams come true led her into business with him. And it's funny because I've talked to my daughter. She's the smart one in the family, and we sort of talked about having her maybe come into business with me.
That's cool.
They love to help their clients pay as little tax as legally possible. Love that. And utilize the extra money to fund their dreams. Whether discussing tax and business strategies or the fundamentals of personal finance, they both have a passion for teaching others and work to make often boring and confusing topics fun and easy to understand. Well, we love that. So give us some examples of how you've helped real estate investors.
Yeah. So real estate investors, it really depends on what arena they're in real estate. We always look at if they have kids, can we get the kids on the payroll? You can pay your kids $14,600 this year tax free. We look at their entity structure, making sure that we have them properly structured there. Like one of our clients, he was dad with Juan. Tell them the story about Juan.
Well, we had a client come in, and this guy was a pretty large investor. Not pretty large investor. We have an echo. I don't know what that's coming from. Sorry.
That's okay. We can hear you fine.
Good. Okay. So anyway, we had this guy come in. He was a contractor. He's making about $5 million, and his strategy was to basically, delay the invoices, hold the checks, and deposit them all in January, which is kind of almost illegal. So
yeah.
What we did is we have a deferral plan we call it the kick the can.
Yeah.
We used to call it the crack cocaine plan because it was fun and addictive, but it's a deferral, so you have to go into rehab and pay it back.
Yeah, exactly. Eventually, the roosters come home to roost, or chickens come home to roost.
So you got to pay it at some point in time. But with our strategy, we were able to defer his income and get him down to only pay. He was going to owe $2 million, which was most of his working capital and the money he had saved for investing in real estate. We were able to get him down to $250 with the deferral strategy, and then he was able to use that. he started doing this in 2010. And you can imagine if you had that much extra cash flow to invest in 2010, what you'd be worth today.
Wow. We've got just a minute to go before our commercial break. What kind of deferral program?
Well, we have a strategy where we basically form a separate entity. We use different fiscal year ends, and they provide a service to you. Like we put payroll, we put advertising, and then basically what we do is we basically teach you how to cycle the funds through so that it creates, if they're both on the cash basis, you can prepay expenses and stuff back and forth and get a pretty massive tax deferral on it.
Very nice. I like that strategy. A little bit more complicated than the average bear, but when you're making that kind of money, it's definitely worth it. Tell you what, we are going to go to our first commercial break here. Here's our first trivia question. And again, for our guests here, if you know the answer, don't say anything yet. Wait till we come back from break. M&M's fruit chews would eventually become what popular candy? Call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which, by the way, is worth over $100. I want to make a mention here for Integrity Electric. Call them to check out what a Tesla Powerwall can do for you, and that's integrityelectric.net, not .com, but .net. Again, I'm going to ask the trivia question again for the tanning certificate. M&M's fruit chews would eventually become what popular candy? Call 888-912-1190. Again, the first caller with the correct answer wins that tanning certificate. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with my special guests, Byron McBroom and Melanie Sikma. Our first trivia question, M&M's fruit chews would eventually become what popular candy? Anybody know?
I Googled it. Can I guess?
You cheated. Okay, go ahead. What's the answer?
It's Starburst.
Starburst. That's right. Very good. Okay, the next time you can't do that.
Do I get the tanning certificate?
Yeah, that's right. Well, we got to first see if anybody wins it on the air. All right. So again, being a kind of a busy time. First of all, thank you very much for taking time out of tax season to spend time with us, because I know, let me ask you now. It's already after December 31st. There's a few tax strategies that some people can use. Do you want to share any of those tax strategies with us? If people are driving in their car and they're mentally taking a note of what they can do now to save taxes for 2023.
Yeah, if they're a real estate investor, they can still do cost segregation studies and get the bonus depreciation. They can do that up to the time that they file their return. So that's something that real estate investors can take advantage of. One thing you can do, if you did hold board meetings in your home, if you had any type of meeting in your home, if you didn't utilize the Augusta strategy, and there's some qualifications for it, but you can always reclassify some of your owner distributions as rental expenses, and that's if those meetings were held. So that's something that we might look at. Then, Dad, what do you think are some other ones?
Well, I was thinking of the bonus depreciation as well, and then. You can always go with the standard, if a lot of times we have people look through their personal accounts and look for business items, because they're pretty good about, a lot of times you accidentally pay stuff out of your business accounts. You might pay your car insurance, you might pay for some travel that you took to be construed as business, and just going through your personal accounts will actually come up usually with some substantial deductions for you.
Yeah, we had one client that we audited his personal accounts, and we found, Dad, was it $50,000 or $60,000 in deductions?
$50,000 of deductions.
Yeah.
Wow, that's amazing. And then of course, if you're self-employed, you can set up a SEP IRA. What are because you got until tax time, April 15th, or using extensions on that. What's the limit on that now?
I know for an IRA, I think it's 7.
For an IRA.
I think for a HSA, which I think usually has to be done most of it before.
It's $87.50, I think, or well, it depends on how old you are.
Yeah, you get
like an extra $1,000.
Off the top of my head, I'll look it up while we're sitting here talking, and then
401k is
I love personally.
22,500.
What's that?
22,500 for 401k or any one of those plans.
Oh yeah.
Mhm.
Okay. You know, I tell you, I love those HSAs.
Mhm.
You know, the health savings accounts, because to me, it's just like a big IRA, but you get to use it for
Yeah.
medical
Yeah.
expenses
And
without worrying about whether
the
they're-
HSAs you can do it by April 15th also.
Yeah.
Okay.
And I
Good,
actually
good.
got I just got Invisalign off, and I paid for that with
Oh.
my FSA actually.
Okay. Flexible spending account.
Yeah, which is similar, but it's a little more limited. It doesn't roll over. But it's good for kids or people if they have kids in daycare or if they take care of their elderly parents. There's some dependable care FSAs that they can take care of those costs tax-free.
What's the limitation of deduction on that, on the FSA?
I believe it's the same as the HSA.
Oh, is it? Okay.
Mhm.
Can you have both?
Typically you don't. It probably depends on
Okay.
where your health insurance comes from and all that, but I don't think you'd have both from the same company. It's one. I think it's one or the
Gotcha.
other.
Okay.
The SEP limits are 66 for 23.
66,000.
Yeah, 25%
Wow.
of the compensation or 66,000.
Okay. And did they push the RMDs back to age 72? Is it now? Or trying to remember now. I'm sorry for asking these questions. You have to look up. I don't see just for the audience sake. It doesn't matter how smart a CPA you are. The rules change like almost daily, so you always have to kind of look them up. You know, I always remember I had a in my graduate degree for tax. You know, I took like estate and gift, which I hated, but it taught me enough to know I don't want to do estate tax returns, these 706 forms. But it gave me enough information to be able to say, okay, I know who to call. You know, I know what questions to ask. You know,
Yeah.
And so let's see here. We got another minute before we go to our break here. Give just, if you could, in about a minute's time, explain about the cost segregation, because that's actually fairly new.
Yeah, Dad, I'll let you take that one.
Okay, so the cost segregation, normally when you buy a property, let's say you buy a residential rental and you're going to write it off, you'll write it off over 27 and a half years. And it's
just the building part, not the land.
Just the building part, not the land. Yeah, so that might be 80% of it. But with a cost seg study, what they do is they go through and do an engineering study, and they determine how much of it's 5-year property, 7-year property, 10-year property, 20-year property, and then the 27-year property. And what you're allowed to do under bonus depreciation is write off 100% of everything that's 20 years or under. So you might write off, for instance, the fencing, the landscaping, the doors, the carpet, everything that can be considered in a lower life. You can immediately take in the first year deduction.
And really quickly before the break, if you've already purchased a property, let's say 5 years ago or 10 years ago, can you do that, or does it have to be in the year that you purchased?
No, you can do a cost seg study now and do a catch-up deduction, which everything that you should have taken, you taken in the year that you do the study.
Very good. Okay, tell you what, we're going to go to our second break again. I know it goes fast here because when you're talking taxes, things go really fast. Okay, our second trivia question. Which guitarist notably performed on the Michael Jackson song Beat It? And you should know at least the name of this guitarist. And that's our trivia question. Call 888-912-1190. First caller with correct answer wins a tanning certificate. Again, here's the question. Which guitarist notably performed on the Michael Jackson song Beat It? All right, stay with us. The Best of Investing. I'll be right back. Don't touch that dial. Welcome back to the Best of Investing. Edward Brown here along with my guests, Byron McBroom and Melanie Sikma. Our second trivia question, which guitarist notably performed on the Michael Jackson song Beat It? And Melanie, no, looking at Google this time. Okay.
I already do.
Anyone know the answer to that one? So it's a little harder, actually, unless you know it. Anyone know it?
I don't.
I Googled it again.
You Googled it? All right, go ahead.
I'm terrible at trivia, so I don't even try. It's Van Halen.
Eddie Van Halen, yeah, very good. That was a new one to me.
Yeah.
I want to make a quick mention here also for the Tahoe Lakeshore Lodge in Lake Tahoe. They have 200 feet of beachfront. It's a phenomenal place. I've heard from a lot of people who've gone there that they absolutely love it. So check it out, the Lake Tahoe Lakeshore Lodge. All right, so we're talking taxes here. And let's see here. Could you please explain what being a real estate professional means and what are the benefits?
Yeah.
And this would be as compared to a passive real estate investor.
Yeah. So it means they have like 750 hours of material participation in real estate. So it doesn't mean that they're necessarily a real estate agent. That automatically qualifies you if you are a real estate agent and you're actively doing that work. But it's somebody that's, has several rentals and they're self-managing it and they have 750 hours in that. They get to be a real estate professional. And what that means is that it turns their passive losses or their passive income into active income, which can benefit especially if they have, a spouse with a high W-2 or anything like that. They can do the accelerated depreciation to offset their other income.
So if you have, let's because a lot of people, they love real estate because of the potential losses, depreciation, non-cash items. But if you have, let's say you're just making a ton of money on your rental and it's, so you have a net income even after depreciation. What benefit do you get having it passive versus active or vice versa? Is there any big benefit to having
not much difference? It's pretty much just income.
Okay.
Mm-hmm.
Now, one of the things Melanie forgot to mention is that when you're to be a real estate professional, obviously it's more than 750 hours, but it also has to be more than any other job that you do.
Mm-hmm.
So let's say you're a dentist and you're working full time and you do 750 hours of real estate on the side, you're still not going to qualify as a professional because it does have to be more than the other profession.
Gotcha. So you'd have to be a dentist for less than 750 hours.
Mm-hmm.
Most of them work only 4 days a week anyway, so you might be able to do that.
That's true. And then isn't there something I read one time that if you have a triple net lease, that automatically kicks you out of being a professional because I guess in theory your tenant is paying for everything, but it's kind of weird because you still have to manage it. It's kind of weird. The owner of the real estate, the landlord, still is the one who has to, go out and research whatever gardener or painter,
They still
etc.
got to hire them.
Yeah.
I remember there was something, and this is just back in the crawl of my gut, and I don't know it off the top of my head for sure, but I remember when they first started with these passive loss rules and active rules, there had to be 15% of the expenses had to be paid for by the manager. There was a rule to something like that. Now I couldn't quote that off the top of my head, so I wouldn't be.
Of course, like a triple net, generally the landlord's gonna pay it and then just get reimbursed.
Right, they invoice the people.
So, versus just telling the tenant, hey, go hire anybody you want and pay for it. No, I can see that. It's so funny. I mean, I Byron, I'm going to guess you're old enough since you've been in the business a long time too, that the at-risk rules when they came in before that, these tax shelters were just like people would put $100,000 into something, get $1 million deduction because they were borrowing, didn't have to pay. It was non-recourse debt. It was like a no-lose situation. And Congress and the IRS got together and colluded and said, no, we can't do that anymore.
Well, one thing we ought to mention, the benefit of being a professional real estate investor. Normally, if you make over $150,000, you're not allowed to take any of the losses on your real estate. You don't lose them, but they just go into a piggy bank and you save them for later when you either dip below or you sell a property and have a big gain. So it allows you to take that $25,000 loss and then even go into all the losses when you're a professional real estate investor.
Gotcha. Is there any alternative minimum tax issues for one versus the other that one has to consider? I'm trying to remember off the top of my head.
If I remember correctly, I don't think for alternative minimum tax they're allowed to take that $25,000 loss. But
that sounds about right.
I'm pretty guessing at that one, but that's what sticks in my mind.
Yeah. Again, you're smart enough to know. You know what? I know exactly where to look and get the answer to interpret the code. Again, it's kind of funny when I don't know when you graduated, but when I graduated college, we were working off the code of 54.
Oh yeah.
because the 86 code hadn't been.
Yeah, I was in
created
81.
yet.
I started in 81.
Yeah. Okay. So right
Mhm.
around right around same as me.
Mhm.
But what year were you born?
57.
Okay, I was 1960. Okay,
Yeah.
so I get to call you the old man.
Yeah,
there
I'm
you
the
That's
go.
all
only
right.
one in the room.
All right. Hey, let's go to another trivia question here. This is fun. Which branch of the U.S. Armed Forces used the slogan, "It's not just a job, it's an adventure"? All right, that's our trivia question. Call 888. This time I don't see Melanie looking at Google
I'm gonna
yet.
try to
that's-
guess.
I'm just teasing you. Call 888-912-1190. First caller with the correct answer wins that tanning certificate, again, which is worth $100. So that's pretty good. Which branch of the U.S. Armed Forces used the slogan, "It's not just a job, it's an adventure"? All right. I want to make a mention here also for ITEX, which is a barter exchange. And check them out, ITEX. It's all legal. You get 1099s and everything. It's a good way to do business without using cash. Stay with us. The Best of Investing will be right back. Don't touch that. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with my special guests, Byron McBroom and Melanie Sikma of One Stop Tax Strategies. Okay, our third trivia question. Which branch of the U.S. Armed Forces used the slogan, "It's not just a job, it's an adventure"? Anyone?
I didn't Google it, but my guess is going to be the Coast Guard.
No, it's
No.
Army. I think it's Army.
No, actually, it's the Navy.
Oh.
Yeah. I mean, it's funny. It sounds like the Army, but apparently it's the Navy.
Never again volunteer yourself. That's what somebody told me.
Yeah. So, but before I forget, if the audience wants to get in touch with you to ask questions, get on your appointment list, etc., how do they get a hold of you?
Yeah, they can either follow. I'm pretty active on Instagram if they're on Instagram. So Melanie Sikma or our company One Stop Tax Strategists. Otherwise, they can text 209-924-4192, and we can offer them a free tax assessment. So they can just say that they found us on this show. We can offer them a tax assessment and see if they're overpaying at all. Typically, if somebody's making over 200 net profit, I can save them around 60,000. So on average.
Wow.
Mm-hmm.
Well, it's funny. When I started my own business back in '83, I was just a young whippersnapper, and I didn't really know anybody per se. So I went in my building because I was working as an accountant for somebody else, and I wanted to start my own company. And why were people going to look? I looked like I was 17, and I was 23. So my attitude was, I'll tell you what, I will review your tax return for free, because I said a lot of CPAs really don't know that much about tax. They know a lot of accounting, but they don't know tax. I said, I've got a master's in tax. I think I can probably save you some money. Let me review your tax return, and I won't charge you unless I get to amend the return. And back then, I mean, we had simple things like income averaging and easy stuff.
Yeah.
Nowadays, it's so much more challenging to do it. But that's how I built up my tax practice.
That's cool.
And it worked out pretty well.
You give value first, it often comes back to you tenfold.
Yeah,
right?
that's it. But see, the thing is, now I really don't do tax planning. I do just a few simple tax returns, like an H&R Block type, and then I refer it out.
Yeah.
And I even tell people, because like I manage a fund, a 506D Reg D fund, that basically we buy discounted mortgages, and we give out an 8.5% return, and we just hit like the $9 million mark.
Nice.
The thing is, our fund qualifies for QBID.
Okay.
So I tell the clients, I said, listen, talk to your CPA. I said, I'm not giving you any tax advice, but just let him know, because I don't know if you and your tax return information, based on the limitation, if you qualify.
Yeah.
But just so you know, our fund qualifies for QBID. So I always kind of back off from giving the tax advice. But you guys are the tax experts, so we want to ask you, what's the most clever strategy you've seen using self-directed IRAs?
Yeah. So with one of our clients specifically, he really utilizes this. So I'll talk about it in his sense. He's a wholesaler. And so what he does is he puts options to tie up his properties inside of a Roth and a Roth IRA. And so then prior to the sale, he sells that option and it ties up all the gains into the Roth. And so it makes the gain non-taxable. So you can do it 5 times per year. He has a wife and 2 kids. And so he does 5 per person. And so he does about $250,000 tax-free each year in that Roth.
Okay, so he ties up a property to purchase,
the Roth,
right? Is in a Roth, in his Roth, but then he doesn't follow through with the purchase.
He just sells that option to somebody.
Okay, so I mean, he's got to make sure that he's smart. He's wise enough to choose a good piece of real estate to do it.
That's what he does for a living. He does about $2 million worth of this.
He's a wholesaler. Yeah, he's very successful.
Yeah. Very interesting. And I guess the reason for 5 and under is otherwise he'd be a dealer.
Yeah.
Is that the whole idea?
Then it's not capital gains. Then it's not capital gains.
Yeah, but if it's in a Roth, it's not taxable anyway.
Yeah, but I think you have if you have business income within the Roth, it's a problem.
And then you get into the 10 to, oh my God, I'm losing my train of thought on here, where potentially you could UBTI. Yeah, gotcha. Okay,
we had another guy
business taxable income
who was buying the property, but he would basically before he owned it, he would tie it up with an option with his Roth, and then he would after that was all done, he would buy the property individually, because now he's not doing a prohibited transaction because he's buying it from someone. It's just subject to an option. And then he fixes it up, and as he sells it, he has the Roth pull the rug out from underneath him and hold a lot of the gain inside the Roth.
Yeah, no, that's great, because if it's this is my prediction. I predicted, like, back in 1984 that they were going to start taxing Social Security. Everybody thought I was nuts, and I said, no, the government's going to look at where they can steal money. And so my latest prediction is that they may not get rid of Roths, but what they're going to do is they're going to say, if you have a Roth IRA, we want to know, like, how much income is generated, what's the value of it, et cetera, so that they can tax other items in your tax return. Very similar to, like, private activity bonds, municipal bonds, stuff like that.
Or they'll make it so that if you make over a certain amount, they tax the rich.
Yeah, but again, theoretically, they're supposed to. But they'll just do it they'll do it a sneakily way. The government is very sneaky that way.
I always say, just be glad you don't get all the government you pay for.
Yeah, and what you vote for. Yeah, exactly. Let's see here. We only have a little bit of time left. Is forming a holding company beneficial?
That's a good, it depends question. We oftentimes see, especially with newer investors, they'll come to us from different companies, and they have like 5 different companies going up to a holding company, and they've done like one deal. And, it's like, it just overcomplicates something that's not necessary. And it makes the tax return really expensive. It makes the person that formed the LLCs rich, but it's just not beneficial. So it really depends. Dad, when would you say it depends, or when it would matter to have
I would agree with
company?
you. And especially a lot of these people come from states that, it costs $10 a year to maintain an LLC. California is a lot more than that. It's $800 plus you got to file a form. So I always tell people it's about $1,400 to maintain an LLC here. You're better off just buying an umbrella policy.
I was just going to say, a lot of times just buying the insurance. Okay, stay with us. The Best of Investing. I'll be right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Byron McBroom and Melanie Sikma. Now, just before we came back on the air, Byron, you had a couple of very interesting tips that you wanted to share with the audience.
Yeah. So basically, we have plans on how to potentially make your college education for your kids tax deductible, and how to basically make it so that you can take advantage of other people's tax brackets around you. For instance, for our parents with people with college, what we do is we have the child form a business while they're in college. We make it an S corporation, and then we have that company provide a service to a business owner. And then what we do is we pay them a reasonable fee for that service. They actually have to do a service. You can't just make one up. But the beautiful thing is, you take a college student, if they make $40,000 a year, The tax on that happens to be $2,500, which happens to equal the education credit, so there's no tax on it. And then the parents get a $40,000 deduction, and the tax on that might, depending on what state you're in, might be $17,000, $18,000. So this is a good way, and then have the child pay for their own education.
Now, do they pay them a 1099 or no? They actually pay them as a W-2 employee.
What we do is we have them form an S corporation, and we have them pay the corporation for that service. Now, there's a couple tricks where for someone 18 to 26, if they're a college enrolled full time, they have to have 50% of their support made in earned income. There's a couple traps to watch out for, but this really makes it so most people making good money, they make too much money to take the education credits. And this way, you put the income into your kid's name, and that way the kids can pay their own education and get a credit for it.
We've also gotten some of our clients that have had kids paying, out-of-state tuition. We've gotten them in-state tuition using that strategy as well, which could be more than the tax savings and all. Like if you really did.
That's a good point. Yeah, these out-of-state tuition gets really expensive.
Really expensive.
Wow.
Because that way they can show that they're financially independent.
Yeah, very good. Again, give out your information one more time, because I gotta think that's got to be some people who'd be interested.
Yeah,
in
they can text 209-924-4192 or reach out to us. onestoptaxstrategist.com is our website, or follow me, Melanie Sikma, on Instagram.
Now, you've got a 209 area code. Where are you located?
Ripon.
Ripon, okay, which is in the
Central Valley by Manteca Modesto.
Central Valley. Yeah. Now because we have a lot of listeners from Santa Rosa to San Jose.
Okay.
I don't know how many people are that far out. Do they have to meet with you in person?
No,
or
we
can
do
they
practically all virtual. We are happy to meet with them in person if they prefer, but practically all virtual.
Okay. No, I really like that. Let's see. Was there anything else that you wanted to mention here in one more minute?
Something similar to what my dad just talked about is what he does with my grandma. And this is great for people with parents that they help or with the lower brackets. He does the same thing with my grandma. She's at the lowest bracket. We're in California and he's at the highest. So it's a big gap. So he does the same thing. Yeah. But when you're after a certain age, and if you're not in school, you can be a passive owner. So he has my grandma. She's a passive owner of a company that provides services to his one of his companies. And so he puts about 80,000 of his income to her bracket, saves him about 40,000 on his tax bill. She pays 10. So he uses that to support her, and he makes a profit on helping my grandma out.
Gotcha. What kind of service does she provide?
Well, you could be anything that, like it can be a marketing company. It can be a material company. I have one client that does this. His parents actually arranged all the travel arrangements for him. So they made a travel arrangement company. But you just have to have a legitimate service with a legitimately priced product.
All right. Well, Byron and Melanie, thank you so much for joining us. And here's our thoughts for the day. So I have a step ladder. My real ladder left when I was a kid. And as I get older, I remember all the people I've lost along the way. I think to myself, maybe a career as a tour guide wasn't for me. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.